This might be one of the best market reports I've done in a while. Before we get into all that, make sure you like, comment, subscribe, share, message me, whatever, depending on what we need here. Probably like, comment, subscribe. But I'm going to get into it and apologize. I'm a little scruffy, but that's how this market is right now, to be honest with you, because it is scrappy. And I'm just going to show you the data to go over it so you can understand what's going on, whether you're a realtor, whether you're a buyer, whether you're a seller, so you get it from the data standpoint of what's going on in our local market with the numbers on everything. So let me just get straight into sharing that. So hopefully this will help you combat the sensational headlines, the popular opinion of your neighbor, friend, brother, uncle, mother, local economist, whatever. Look at the data, look at the facts. That's really what we're trying to get you to do here, instead of getting lost in the pandemonium of headlines and how people are feeling and thinking, instead of going directly off of what we're seeing, which is the data. So what I'm showing you here, and I'm going to kind of read some of it, make some comments, give you my interpretations, understanding, so that you're a fully informed buyer, realtor, seller, whatever you are that's watching this. So to give you an idea, so home sales are, the number of home sales are down. If I can summarize this whole thing for you, too long, didn't read, didn't watch it all. The number of sales are down, the home prices are stable. That's really what this is. Because some people, when I hear home sales are down, that doesn't mean prices are down. That means the number of sales are down. And that doesn't mean the home prices are going to drop, because of the supply and demand of this thing. So the number of sales are down right now. We have 1.1 months supply here, as you can see at the bottom of this. And so simply because of supply and demand, the home prices will not fall like people think they are. Because if I say the number of sales is down, it just means not as many homes are selling because of interest rates is where it's at. But let's look at the numbers. So home sales have fallen by 17.6% in July. In July of this year compared to last year. We know what was going on last year and all the craziness. So we went from 995 units down from 1159 in 2021. So as you can see, homes are still selling. They're still going on. There's just not as many of them. And I'm going to get into the graphs here, which will probably help understand this the most. But that right there is the summary of it all. So we're seeing the number of sales go down, prices remaining the same, being higher on everything. And if you want this, I can email this to you. You can have it. Shoot me a message, reach out. I'll send it to your way, no problem. But I'm going to get straight to some of the best things. So this one right here, I was feeling this in July, but until they release these reports, I don't go off of feeling and intuition and that kind of thing, even though I have kind of a hunch. But until I see the data, I'm not basing it just off of my personal situation or my personal things, but being so involved and doing so many deals and so many sales and keeping my eyes and ears to the ground, like in the trenches with this, helps me kind of understand what's going on. And then when the data comes out, I'm like, yep, I was feeling that. Because what we're seeing, if you look at this drop from June of having 1,068 units sold, closed, like actually closed our market, to 955, you can see where that's going down compared to 2020 is in the red. Pause this if you need to study it, analyze it, look at the data. 2021 green, you can see where the home sales are up. Now blue, 2022, you can see how if you're a realtor over the last 2 years and you were used to this going on, the red and the green, and now the blue is going on, you're sitting there going like, crap, this isn't easy like it used to be for the last year or 2 years. And I'm seeing a lot of realtors quit. A lot of people get out of real estate because they got into it in the last year or two because they saw the opportunity of the market at the time. And the long-term veterans are kind of snickering and sneering and laughing at some of those people that got into real estate because there's kind of some, I don't want to say quick, easy money, but there's a lot of people buying and selling, not as much anymore. So there's less to go around. And the long-term people who take the long approach of servicing, working with your clients, building a real career out of this, not just trying to get in and get rich quick, are going to make it. And the ones that got in just to kind of try to take advantage of the market, essentially, are probably not going to do so well on a realtor standpoint. So what's that mean for you as a buyer or a seller? This will give you an idea too, like 2020, this is where our average closed price point was at. depending on the month and the time of the year. And this should give you an idea too, where, so as you can see, home prices went up, home prices went up, home prices went up. And now you're starting to see a slight dip from 246 to 240, but that doesn't mean it's going to go crash all the way back down to 2020, you know, where people think that it's going to happen. And I'll get into that and show you here shortly where it's at. So even if you see a slight dip or a slight amount where you get down to like an average price point of 230, that's still higher than what it was a year ago, 2 years ago, on average on everything. Again, we're looking at the data, the facts, not the feelings of this. And like any situation with real estate, it's all very personal. It's very specific. There's a lot of spot markets within this overall market, because what we're looking at here is the overall market in the South Central Kansas region on everything. So you need to take that into account. But where a really good realtor like myself or the ones on my team does is we narrow it down to the neighborhood, and we narrow it down to a very specific criteria of your house and your area to give you more of this type of data, but on an individual basis, because every single person, every single house is different on the feasibility of being able to sell or not, what it'll sell for, how fast it'll sell for. And we use the data to show you that. Plus our advanced marketing, sales, all those things go with it. But this can kind of show you how home prices have been rising and will be solid on everything. What we're starting to see is the number of sales go down. The average days on market has been continuing to drop from 2020 down, 2021 and 2022. And that the reason for that is that lack of supply, essentially. We just don't have enough houses on the market on everything. Same thing with median days on market. Now, I'm no genie. I don't know for sure, but I could see this days on market starting to rise. So houses will still sell. It's just going to take longer to sell them because there's less buyers, and it'll start to even out the market, not make it be quite so frantic on everything. This will give you the best depiction of what we mean when I say there's a lack of supply. So you look at all the way from 2016 to 2020, the number of active listings has been going down and down and down and down. Supply and demand. There's not enough houses for people that want to buy them. When that's the case, the price stays up. Supply and demand. Like, it's the easiest, simplest, most easiest way to understand this of why home prices aren't going to fall. It's just not possible because of supply and demand with everything. This will give you an idea too of active listings by month, where 2020 was at. We all know what was going on in 2020, 2021, and now where 2022 is at. So honestly, the number of active listings looks pretty similar to 2021, at least through July. We'll see what the next 5 months hold out for the rest of the year. But I could see this number of active listings to continue to go up here. I'm not making a prediction. I'm making an observation of what may or may not happen. I'm not one to make predictions and projections. I'm one to assess things in the real-time market and situation and see where things go from there. Again, pause these things if you want to study them, make your own observations, your own opinions on that. Mine is one of them. I've been a fairly successful realtor. I'm not going to do this out of ego or toot my own horn, but I've sold a lot of houses and had a lot of success in real estate with helping people be successful in real estate on everything. If you're a realtor, this is something I want you to kind of key in on and pay attention to and look at where the majority of the home sales are at. 200 to 400,000 is where a lot of them are at. And you got 12% up to 500,000. That gives you a majority of who buys houses in our market, where transactions happen. There's not as much that goes on in the luxury market, $500,000 plus. You can see how many active listings there are, how much goes on there. And honestly, the same thing when you go towards the lower end of the market at 150,000 and down, there really isn't a lot of houses out there. There's some in the 50 to 100,000 range, but the majority of the market is 200 to about 400, 450 in there, to give you an idea of everything. Active listings. So we are starting to see the active listing price go down. That doesn't mean that's what it's sold for. What it is these are people that are too late. They're too slow to the show on everything. And they waited too long to put their house on the market. They put it up there really high, thinking people are going to buy it. Then interest rates drop and they're not going to get what they want out of their house. It doesn't mean they lost the value of their house. They just couldn't get it sold for the price that they're asking because they were late to the opportunity window that was coming through. And just because you list it at a price doesn't mean to sell for it. You know, I know people hear a lot about, oh, my neighbor's whole house sold for over asking in 24 hours. And you all hear about those. What I would love to show you, if I could pull it up, there's how many houses don't sell and just go like expired, canceled, withdrawn, get taken off the market, and nothing happens. Your realtor's not going to talk to you about how they couldn't get the house sold. Your neighbor, your friend isn't going to tell you about not being successful at real estate, not getting their home sold. They're just going to quietly take off the market, tuck their tail behind their legs, like between their legs, and walk away, and not like going to be pretty quiet about it. They're loud about the anomalies, the exceptions where it sells really fast and over asking price and all that. But what you're seeing from this is a lot of people put their house on the market, couldn't get it sold, and just take it off and keep it. They're not in any worse situation. They just couldn't get the house sold on anything. They're just going to stay where they're at, type of thing. But median price, this gives you an idea of where the listings have been at, that kind of thing. So again, this just because you couldn't get it sold for that price doesn't mean you lost money, doesn't mean you lost value. You just couldn't get it done. You just got to stay where you're at. That house is still an asset. It's still worth that amount. It's just that you couldn't get it sold and you got to stay where you're at. Which if you're making smart long-term real estate decisions, you should be in a position that's strong like that, where you're like, I don't have to sell, but I want to. And if I can get the price out of it that I want, I will. But if I can't, I'll just stay here. Which is a lot of Kansas people do that because we're conservative, and that's the smart way to do it. And that's a good thing to do. But you got to study what's possible and what works in the system. So average days on market, still really low. You can see where it was in 2020, where it was in 2021, where it's at now in 2022. Some other things that I was seeing from this month supply analysis, we're starting to see it creep back up. I could see this again start to creep back up, but even in 2021, it's fairly normal to creep back up. And then like when the winter hits in Wichita, this market just dies. To be honest with you, people are doing holiday stuff, winter stuff, whatever. Like they're really not buying unless they have to on everything. This will also, so this is probably one of the best charts that's out here to show you guys what I mean by supply and demand. History of month supply. You see how the history has been going down and down and down and down. It really hasn't been getting better when it comes to this. So based on supply and demand, your home price will not go down. You just may not be able to sell it is the only thing. That just means stay where you're at. That's what that means. That means it just stagnates. It stays there. If you're a first-time home buyer, it may mean you need to rent for a little bit longer, which I know y'all are dying to get out of rent because rent is just starting to rise too. And you're like, man, this rent just keeps going up. I need to get into a fixed situation, especially with inflation and the cost of things going up. Buying a home is what helps you hedge against inflation and stop that kind of thing. I'm kind of going to just let the visuals speak for themselves on everything. New listings by month. We are starting to see some of those drop too, though, as you're seeing. Again, pause these, study the data. If you are a buyer or a seller, you can see the prices coming up. These are new listings, not necessarily closed, but I'm a data nerd, geek nerd. Let's get to the next one. It's contracts written. So this will give you an idea too of, as realtors, we're writing less contracts. We saw 2020 go nuts, 2021 go nuts, 2022 is not going as nuts. And this is what I mean by, you got to write contracts for things to go under contract. And if we're writing less contracts, there's less buyers, there's less people in the market. That's largely due to interest rates. That's also due to a lot of uncertainty and people kind of holding their breath, waiting to see what's going on, this and that, blah, blah, blah. And honestly, I think a lot of it has to do with people getting kind of tired of getting bullied by the market, getting pushed by the market, getting bullied by sellers. Buyers are getting tired of getting bullied by realtors, bullied by sellers, but like all of that. And so like they just want it to be slower instead of so fast and pressured on everything. So if you are looking to buy, you're in a good spot because you have some more breathing room, some time to do some of those things. If you're a seller, you can still sell because there's people in the market that are still wanting to buy and sell, and they're going to be serious people. it's just not going to be as frantic as it was before. And if you're a realtor, you got to pay attention to that and not play this quick, slick, push people into house, fast, wham, bam thing. Play the long-term game of building a career out of this, not just how fast can I get a commission check? How fast can I get them in a house? Oh, it's like, think about what's in the best interest of your client long-term. Build a 3 to 10 year plan for them for this house. And even if that means it takes them a year or two to find the right house, so be it. Be in this for the long game. If you want to be a realtor for a long time and be successful with this long term, like you got to be thinking long term of what's best for your clients, not just where's my next paycheck coming from this month. And I know that's tough if you have no money and you have no commissions, no lead, no opportunities, but you got to do what's in your best interest of your client, even above your own. I'll get off my high horse with that. Contracts written, median price. You're starting to see the type of home being bought is coming down because of interest rates. Again, interest rates go down, the type of houses we're buying, writing on go down. There are still cash sales, everything else goes on with it all. Contracts written, this will give you an idea too, where we had a spike of a lot of contracts written, but then we're kind of evening out as far as number of sales on everything. Median days on market, pending contract analysis. This will kind of give you, as a realtor, if you're looking this, as a buyer, as a seller, if you look at this, like there are less people writing contracts as a realtor or as a seller. If people are going like, where'd the seller's market goes, like it's still a seller's market. We just had a hyper seller's market recently with all this amount of pending contracts going on. So houses are still selling. It's just that they're not selling as hyper paced of a rate as they were before. We're kind of returning back to a pretty normalized situation because in our market, usually about 1,000 houses a month on average is what's sold when you normalize it between the entire year. And when we're seeing 14, 15, 1,600 contracts pending in a month for Wichita, that's unusual for our market size based on population and number of houses. And so we're returning back to what we see is more of a normalized situation, about 1,000 houses a month on average. Usually we sell about 12,000 to 14,000 houses a year in our market. I'd have to add up what 2020 and 2021 is, but it's a lot more than that over the last 2 years. We've had just some freak show stuff going on the last 2 years. But this will also give you an idea too of even in June and July, with the decreased amount of sales, the prices stayed where it's at. The prices have risen, the prices have stayed where they're at, even with interest rates dropping or rising all the way from March, April, May, June. When you look at this, the price did not drop. So continue to watch this throughout the rest of the year. I'm going to continue to watch this. I don't think this price line will drop. I think Wichita has a new standard of pricing that we all got to get used to. And I think there's some people holding their breath, waiting for these prices to drop. And they may drop a little bit. They may drop to 260, 250, but that's still higher than what it was in 2021 and 2020, significantly. When you look at how much prices have risen in Wichita, and it's due to a couple of things. Wichita has historically been undervalued and low. And COVID has helped for things to increase probably to the price point we should be at, to be honest with you. For a city of our population size, market size, we have been historically pretty low priced and spoiled by that, where I think we've had a market correction that is in very favor of the sellers with an uptick, but I don't think we're going to go down from here. I think this is going to be our new standard, our new normal on everything. But like I said, we'll continue to do these and monitor the price of this, but I could see this, instead of continuing to rise, I could see it flatline out or maybe dip a little bit to like 260. But that doesn't mean the sky is falling, the market's crashing, things are falling apart. Like we're kind of just getting a breather from all this craziness we've had going on. So, and in some ways, I think people are okay with that around Wichita. Again, you kind of see the same thing with median, average and median, or it's kind of silly how they do both of those because they're fairly similar, but it confuses people. But you at least get an idea of where the market has gone and where it's going to stay on everything. Pending contract analysis gives you an idea of like how, like when they write the contract, how long the days on market's been. So right now, again, we're still hanging around 17 days on market for your pending contract and everything. So if you're a seller and it hasn't sold in 5 days, or hasn't sold in a week, you're still okay, because the average days on market is 17. And so it's not going to be as much where you just throw the house on the market and it just sells. It's going to be a more of a time where you got some time to see it online, and you got some time to go see it in person. You got some time to think about things and think about the house you're selling. And like, it's just not as rushed of a situation. And honestly, I think everyone, us realtors included, are okay with that, of having more of a strategic, planned out, thoughtful process where we're sure about doing this. We're not frantically rushing to make these big life decisions about buying or selling a house, because it's a big decision. When you got to make it that fast, like, it scares the shit out of people. Like, so, I mean, I don't blame them. Anyway, that's the rest of the local market analysis for our market data. I love going over this nerdy stuff. Hopefully you guys got some value out of this too. Please like, comment, subscribe, share. Think about who else could see this data. Use this to combat the headlines, the craziness, everything that everyone's telling you around you, that the sky's falling and yada yada, and you're about to hear from a lot of people. Number of sales are down, the market's dropping, this and that. I was like, no, it's not. The number of sales are down. The prices are going to remain the same, simply because of supply and demand. Use your brain, use your emotional intelligence, and look at the data. And when you need a solid, reliable, straightforward, supportive realtor, that's what we're here for. You know, we are in a sales industry, but we're not like your typical salesperson. We're more of a service-based situation, where it makes sense for you to make these transactions, make these moves, look at the long-term big picture of all this. Because the truth is, I and my team want to be your long-term realtor for life, not just throw you in a house and just because the market's good and everybody's doing it. Like, we want you to make solid long-term plans for your personal wealth through real estate. And obviously you got to live in this house. You got to like it. It has to fit your lifestyle needs, what you're looking for there. But anyways, that's enough of me ranting and rambling. Appreciate you guys watching as always. Please reach out to me if you have any real estate needs that I can help with, whether locally, nationally, what have you, and we'll go from there. See you guys.